Let's talk more about what this latest trade news means for the market. Joining us is Jim Iuorio. He's managing director at TJM Institutional Services, also a CNBC contributor, and CNBC senior markets commentator Mike Santoli here as well. Mike, what do you think? We watched this morning. Futures went from up to down to not down so much to all of a sudden down by about 170 points.
It's a perfectly handy excuse for a pullback. Right? We went up 9%, almost in a straight line. No pullbacks from October 8th or something like that until a couple days ago. So you were ripe for kind of some disturbance in here to the bull case. And the very, very gentle consensus bull case was de-escalation on trade. We have an inflection point to the upside in the global industrial economy. Both of those things got challenged with the ISM number and then this. So I think it's an exacerbating factor. I don't think it's possible for the markets in any systematic way, in any kind of rigorous way, to discern what the meaning of the president's comments were. It could easily have been one of his normal conversational switchbacks. It could have been a signal that maybe he's getting tough. It could have been a signal maybe no deal is on, maybe putting China on. Who knows? But the point is that the premise of de-escalation and a rubber stamp deal and no tariffs December 15th is at least challenged.
We've mentioned it before. Don't you get nervous when he feels like he's got some house money to play with and he's negotiating?
The pattern has been there, exactly, right. When the market's at a high and
got 25 percentage points on the S&P to work with, I can give back 3 or 4 to force China, to force their hand.
That could be, although I would say that works better if the rest of the economic numbers are cooperating and you don't actually have it snowball into a larger concern about the economy.
It feels like Groundhog Day. A year ago, December started, everything was going great, and within 2 weeks, the Dow was down 15%.
Everything wasn't going great. The market was going down for 2 months by then. But it did seem like December, you were going to lift out of it. The first day of December, you were up 1%, but you're still well off the all-time high. So I almost feel like now it's normal pullback time until you get a few percent below here where it's like, oh, maybe the rally since late summer was a little bit on a false premise.
Jim, jump in here. What do you think right now? How are you feeling?
To put a finer point on what Michael said, for someone in this negotiation thing to say that they're not pressed for time, to me, does not seem newsworthy at all. So that lands me back at kind of what Michael said, too. From October 10th, we had a one-way street. Yesterday, we made a higher high and a lower low, and we closed on the lows. To think there's some nervousness in the market of people who were reminded what risk was. Just yesterday on Worldwide Exchange, we talked about all the short positions in the VIX. To me, that's some complacency. And all of a sudden, people wake up and are like, wow, there is some risk in the market. So I think we could trade the S&P all the way back down to 30, 35. That's 2% from where we are now, just to shake out people from this latest move. But I don't think it's newsworthy at all. I think the one thing that is a little bit disconcerting is that the dollar broke on this. I'm hoping that was because Trump also was talking about how Powell should be lowering rates and going to zero and debasing the currency, whatever. I'm hoping that was part of it, too. But that's a little bit something to notice. But other than that, I think it's business as usual.
You talk about complacency. Is that something you see on the floor there?
Well, it was. I mean, up until yesterday, the VIX was low. Short positions on low were relatively high on the VIX. And again, it happens the same way all the time. And shorting VIX is usually a great play up until the moment that it's not, and you lose 5 times more than you made. So I don't understand that trade, how everybody piles into it so willingly. But there was some complacency, yes.
Mike, we've got less than 2 weeks until that December 15th deadline for additional tariffs. What would the market's reaction be if the next tranche of tariffs were actually put on?
You tell me what it's going to do in the next 2 weeks, because it is going to be all about what's priced in. We got up to a point in the market where relief from the fact that the economy was in a 2% mode became just sort of the assumption as opposed to the upside surprise. I do think that if we get a new round of tariffs on December 15th, the market's not going to take it particularly well, because that seems like an exacerbating factor.
We've had
Mike, one more thing, too. If the lingering trade talks gives the Fed ground cover to stay dovish, despite the fact that they haven't seen any real destruction to the macroeconomic condition. So I don't think it's all bad if things linger a bit.
No, I agree with that. I mean, the market seemed to really like the idea of 3 cuts and then the Fed goes on hold. It fit this really tidy script from the 90s. If we're talking about a little more of an open-ended easing cycle to restart that soon, I think that's a little bit of a different storyline at a time when we really need to see the economic numbers and earnings start to come back. Look, from early October till Friday, you had Apple at 140 billion in market cap. You had Microsoft at 100 billion in market cap. Had nothing to do with exports and China trade. It had to do with sentiment getting better and people thinking that the economy was inflecting and they were willing to take on more risk. So I think you have some unwind of that. Yesterday, the Nasdaq was the underperformer, having nothing to do with the ISM manufacturing index, those companies.
Right. Market was up 7% since October, to your point. We've had a number of guests on the last 2 days that have said basically no chance that the new tariffs get put on December 15th. That concerns me.
Right.
That concerns me because,
Absolutely.
to your point,
the baseline assumption.
Right.
Yeah.
If those do get put on, how much volatility are we going to see?
I think then all of a sudden we're on slowdown watch again. We're on what's Europe economic numbers looking again? What's China's economic data looking like? Because yesterday we were up at this hour because China's numbers were good. Yeah. So I think we're back on that same treadmill if we get those tariffs. But if we don't get those tariffs, and all of a sudden next year they're already in the base, and we operate on a year-over-year clock. And so that's not a problem if you don't get new tariffs in there. I think that we can easily absorb it.